Hello, my name is Liza Gatrell and I am an Associate Solicitor at Biscoes in the Family Department, and I have invited on today Melanie Tracey, who is a mortgage and protection advisor at Yes Can Do, to talk about her role and how she can help couples who are separating and or divorcing. So hello Mel, nice to see you today. Hi. Can you tell us a bit about yourself to start with?
Yes, so as you mentioned, mortgage and protection advisor. I've been doing my current role for 4 years, self-employed. Prior to that, I worked for a local brokerage for several years, and then prior to that, I started my career at NatWest Bank. Currently, I'm inundated with clients who are perhaps anxious about the current situation, looking after my existing current client bank and telling them what their options are in the short term. As well as all of those new people who are perhaps first steps into home ownership or looking to move and are unaware of perhaps what their options are at the moment. So hopefully we can go through a few of those in our chat.
Yeah, perfect. So obviously you've helped me personally as well. So I did a remortgage myself at the beginning of the year, and that was brilliant at helping me through that. Often professionally, when we come across mortgage advisors or when we need them within divorce proceedings, is where clients are in financial proceedings and the judge has perhaps asked for a mortgage capacity report to get an idea of how much borrowing capacity each party has. Can you give us some idea as to what these reports are, if there's any cost involved in getting the reports, and what a potential client would need to bring to you for you to be able to do one of those reports for them?
Yeah, of course. So the lending capacity report will tell the client how much they can borrow based on a specific scenario. At the very beginning of these proceedings, generally clients aren't 100% sure on what sort of deposits they're going to be working with, so we generally will look at more than one scenario. We will base a letter then to the client or to their solicitor, however they're wanting to have it formulated. Based on however much deposit they're going to have, they can borrow X amount over this term. They don't cost a penny when I do them. I don't charge for my advice and I don't charge for the reports. As far as what information we need from the client, basic information would be 3 months pay slips if they're employed. If not, we would need 3 years self-employed income. We would generally need to know their monthly commitments. So this would be if they've got any credit cards, loans, car finance, those sorts of things. And also we need to know if those are going to be remaining after a separation. And then, as I've mentioned, about what funds they're going to have for deposits. So we don't need the ins and outs, but we do need quite a bit of information to be able to give specific advice.
Yeah, perfect. And do you look at the whole of the market?
I do indeed, yes. That's the benefit of getting a report from us, because we are able to go through all of the lenders. You know, there's a big array in what lenders will offer clients. So, you know, if you end up just going into a high street bank for a letter, you may be disadvantaged because there are other lenders out there that could potentially lend you more.
Yeah. So, I mean, you said at the beginning that you're quite busy at the moment. Yeah. So people are still able to get mortgages and remortgages at the moment. There's no restriction on that?
Absolutely, people are still able to get mortgages and remortgages. There have been restrictions put on the market. There's lots of different reasons for that. If we rewind a few weeks, when we were in the first stages of lockdown, lenders were restricting their loan to values, so the amount of mortgage against the value of the property, because they couldn't get valuers into the house to give a definite valuation on that property. So yes, lenders were restricting how much they were lending. We are seeing more lenders come into the higher loan to value brackets now. The 95% mortgage just isn't there at the moment. That is more because of the volatility within the housing market. You know, if we're thinking of lending a 95% mortgage to someone today, when we think that there's a possibility that house prices are going to be going down in the near future, we don't want to be putting a client in a position where they could end up with negative equity. So that's the sort of reasoning behind those products being pulled. There are changes within the market. At some points it's hourly changes, sending an illustration over to a client and explaining, I need to know ASAP if you're happy with this, because I can't guarantee it's going to be there tomorrow morning. So yeah, things are still changing, but it's just about keeping abreast of those changes. You know, lenders are very good at keeping us updated with those changes. So it's just remember, you know, so and so's now doing 90%, so and so's reduced their rates. You know, it's just keeping ahead of the game.
Yeah, perfect. And what about for people? So a huge amount of people have been furloughed the last 3 months. So if you are one of those people that you're currently on furlough or you have been on furlough, would that impact on your ability to get a mortgage or to remortgage?
Yes. So again, lenders are very individual in the way that they're dealing with the furlough situation. Currently, majority of lenders will take your furlough income, so that 80% or up to the maximum as your monthly or annual income. If you are looking to be returning to work, they would want a letter potentially from the employer saying yes, they're coming back, or that first pay slip, so that you can go back up to your full salary. So yes, it has had an effect, particularly if you're sort of at the very top of your affordability. Losing 20% of your income is a big chunk. However, when it comes to remortgaging, obviously a lot of lenders are still able to give you your rate switches or your product transfers, so that's always an option. It would be very, very rare for a client to have to go onto that standard variable rate, which, you know, sees a massive jump in your payments. That would be very, very rare. So in short, yes, it has made a difference, particularly again for clients who are looking to buy. You know, prior to lockdown, prior to furlough, they had a particular figure in their mind of what they purchased. Now that's been impacted because perhaps one or two parties is now on furlough. So yes, it has had an impact, but you are still able to borrow.
So we are experiencing huge delays at the moment with the courts, particularly where they're dealing with what they would class as their non-urgent matters. And unfortunately, in some circumstances, approving an agreed financial order falls within that sort of non-urgent bracket. So I myself have had a client recently who went to mediation, reached an agreement with his ex-wife as to what would happen. Part of that agreement was that he would obtain a remortgage or mortgage on the property and buy out her interest. Obviously, we've drafted the financial order, it's all ready to go off to the courts, but the court could take weeks or months to approve the order and get it back to us. So I guess the question is, when people are in those circumstances, are they better to be still getting their mortgage deal now, when we don't know how long it will be until they can actually implement that agreement? Or should they be waiting until the order comes back from the court?
Yeah, so it generally is done on a case-by-case basis, again, depending on which lender we've ended up with. The majority of lenders at the moment are offering 6 months on their mortgage offers. So that generally, 9 times out of 10 from experience, is generally long enough to be able to cover any time delay that we might be facing. If we're thinking it might be longer, what I would always suggest is that we do the decision in principle, so that we've got that sort of first documentation to say, yes, this is a possibility we're going to be getting this mortgage. And then we can hold fire. We don't have to go directly through to that mortgage application. But 6 months generally is more than enough time. But again, it's a case-by-case basis. It's about picking up the phone and saying, Mel, this is the situation we're looking at. What do you suggest? But yeah, lenders at the moment are giving us 6 months, so that should be.
That's longer than I thought it would be, actually.
Yeah, it used to be 3 months.
Yeah.
And then over sort of the last 18 months, really, they've all cottoned on that clients are wanting to secure their new rates earlier. You know, once you get to that end of that fixed rate period for remortgages, people generally start to get a little bit anxious. What's my mortgage payment going to look like? So they're trying to therefore secure that mortgage that little bit earlier. So giving you 6 months on your mortgage offer allows you to do that.
Yeah. Okay, perfect. And then I probably left the most difficult question for last. So lots of people. So we've talked about furlough, but one of the other government schemes that were put, or recommendations that were put in place when the lockdown happened, were that mortgage companies should be giving 3-month mortgage holiday to people if they were affected adversely by the coronavirus. If somebody has taken that mortgage holiday, is that going to affect their chances of getting a remortgage? And if it is, almost how long do you think that's going to last for? So obviously it might impact on it in the next few months if they're looking at perhaps remortgaging before the end of the year. But if they're currently in a 3-year fixed rate and they'll be remortgaging in 3 years' time, is it then going to have less of an effect?
Yeah. Okay. So, again, it's going to come down to the lender. Same answer to everything. At the moment, what they are telling us is that because it is a pre-planned agreement, there's not going to be an ongoing effect. However, in the short term, let's say I've got my mortgage, I've just taken a mortgage holiday, and I'm in the process of remortgaging to someone else for when my fixed rate expires. So when the new lender does their decision in principle, they'll be able to see on my credit file that I haven't paid my mortgage for 2 months. So that's going to raise questions. That's going to say, okay, why haven't you done it? Obviously, the immediate assumption is going to be she's taking the payment holiday because of Corona, but they have to ask. So why have you taken the payment holiday? If it is then we've done it because of COVID-19, it will then be, okay, so are you now in a position where you're financially unable to pay your mortgage, and is that why you've taken the payment holiday? Now, what I would always say to clients is only take that payment holiday if you absolutely need it. You know, if you're furloughed and you're not having the monthly outgoings of your fuel or the kids' trips to the cinema, those sorts of things, there's a possibility that you're still going to be able to make your mortgage payment. So only ever take that payment holiday if it's absolutely necessary. Because when we come to that underwriting point where that underwriter is then sitting there thinking, do I need to take on a new client who is currently in a situation where they're having difficulties paying their mortgage? The answer is going to be no. They don't want that. However, if I can demonstrate to them it was a 3 months, they're not going to extend it to now 6 months, and both parties are going back to work, absolutely fine, completely plausible. It doesn't go down any credit file as missed payments. You'll just see that there is no actual monetary payment on there. So it doesn't have any detrimental effect in the sense of your credit file, if you like. Yeah. And ongoing, currently, they're telling us there's not going to be any issues. Again, at the moment, lenders are still finding their way through this. You know, they've not had to experience this before. And so there are times when you'll find, even yesterday, I had a lender email out saying, we've now changed our criteria. If a new client coming to us is on a payment holiday, we don't want to know. So it's about knowing that information. So therefore that lender's completely out of the question, but luckily whole of market, so there's plenty of others to go to. Yeah. But yeah, it's still all up in the air a little bit, but from what we're being told at the moment, it's not an issue. And most of the lenders, if you're on a payment holiday, will still allow you to do a rate switch. So you always have that as an option.
Okay, brilliant. So if anybody is looking for any advice at the moment in relation to mortgages, where can they find you? How can they get in contact with you?
So the easiest way of getting in contact with me would be through my email address, melanie@yescomputer.com. But I am also on Facebook, so you're always able to find me on there, Melanie Tracey. I find a lot of clients, generally, these are the sorts of things they're thinking about once they've sat down after a busy day, and they'll ping over a message on Facebook. Yeah. Absolutely fine, more than happy with that. And then we can start up a discussion. As I've mentioned, I don't charge a fee, so you've got nothing to lose, and I'm completely whole of market. So if there's an option out there for you, I will find it.
Okay, that's brilliant. Well, thanks a lot for having a chat with me today, Mel.
Pleasure, no problem.
It's been a pleasure.